Welcome. We have Monday, we have cycles time. Thanks for joining me again. Another week, another Monday, another market, another day to look at cycles. Welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen. I'm a member of the board of the foundation, and once a week we meet here live to have a talk on cycles, to review current market data and what cycle analysis might be able to show us in current market environment. Join the chat as always. I see you joining with your comments. At the end of the session, I will always take a look at your questions and try to answer at least most of them, to have this also a live interaction with you as members to talk about cycle analysis. We will use the foundation tool we have. Every member can use what we're doing here. So this is no secret science. This is what all members of the foundation can do. And this is just to learn a little bit about cycles and even to show a little bit on cycles. So for today, I just want to, in the first section, review some current market cycles as always. So let's review main markets. Let's see how the cycles look like on these markets. And that's more or less it for today. So I don't want to overstress for today. I think during the last sessions we have introduced harmonics, nominal cycle models. So there's a lot now in. So let's for today keep a focus on the basics and the market cycles. All right. So before we start, have you seen our great new release of the latest Cycles magazine? The latest issue is out April 22nd. It's Earth Day. It's a special magazine edition. And as you're aware, lots of great content. So I will encourage you, move over to our cycles.org site. You will see the magazine button. You can review it live on your own. It's loaded full of content, and in this case, at least a must read. This is a must read if you're dealing with cycles. And that's about the article here listed in the lower side here, The Case for Cycles by Edward Dewey. So that's the must read. At least if you want to follow here on this channel, that's a must read. Because there are lots of rules which are outlined, which are important if you deal with cycle analysis on data sets. And always we keep it here simple. In this 20 minutes, there's a lot more if you do projections and if you want to include this into real life analysis. For sure, you need to deal with more facts around what Dewey teached us. So that's a must read. The other ones are fun and loaded with content. So for sure, thanks to Andy and Bill out of the foundation, my colleagues on the board, for bringing this up again. And thanks for Mark for making this a beautiful magazine. So we will write a short test next week on Monday. So read it until the next time. But yeah, that's it for the magazine. If you have not been aware of that, take a look at it. Okay, so let's now move over to our cycle analyzer. And maybe let's start with the main markets and the Dow Jones index. I think, was it 2 weeks ago? Not quite sure. 2 weeks, 3 weeks ago, I did an analysis here together with you with the 2-hour chart from the Dow Jones index. And I wanted to have a quick look at this 2-hour chart and the cycles we saw, I would suggest 2 weeks ago. You can review it on the channel, and I think it's labeled in the title that we had a look on the Dow Jones index. So if you're interested, or if you have not seen this episode, move back. Because I've uploaded this data set in the ideas section. So there I will just recall this idea from my ideas section. It's also out there in the public ideas section. And what you see here is I've added new data up to today. So this was the point in time when we did the analysis. So it must have been April 9th or April 13th. It was the Monday when we did this session. And I think now 2 weeks have passed since this day. So we have new data in from the 2-hour chart. And therefore I want to go over it with you here in this session to see, yeah, if the cycles have guided us, and if yes, what's the current state. So at the point in time 2 weeks ago, we selected these dominant cycles here with a length of 118 and 85 based off the standard procedure of the spectrum. They are standing out as key cycles at this point in time, and we did the projection here with the composite cycle, which showed us at the point of the day, and we can hide the data which was not known at this time here. It showed us that we are close to a market top, yeah, based on the forecast. And I think this is exactly what I told you, or what we talked about 2 weeks ago with this data set based on the 2-hour chart. I need to make you aware of that the forecast period, as it is a 2-hour chart, it plots continuous time into the future, but the 2 hours chart is not continuous time. So you've just, I think, 4 bars a day. So you need to be careful. The projection line is okay in terms of 2-hour bars, but not continuous time. So you need to be aware of that if you read the forecast. But anyhow, we're just interested in the next important turning point, which is always, I would recommend to look at. Don't look 100 bars into the future based on cycles. I mean, they even get out of projection comfort the more you go into the future. That's similar with the traffic jam, or if you look at your navigation system on your car and it tells you the estimated time of arrival. The closer you get to your arrival time or your point in traffic, the better gets the forecast. That's the same with cycles. Just look at the next 1 or 2 turning points time-wise, which might be projected by whatever composite. Don't look longer here on that line. Okay, so 2 weeks ago, we've seen that this could be a market top, yeah, or it should be a market top based on cycles. If we don't do any other analysis, just look at the cycles. It showed us that we could see a topping market here. So, and now let's tune in what the markets did after that point in time, and that's the light blue data, which is shown here. And I will zoom in a little bit to make it larger for you to follow this data set here. So, and this is what happened in the market afterwards. So now I want to make an important point, because what we can see here is that we had a strong, yeah, uptrend into this, or let's even make it, try to make it clearer. So when we see from here into this topping point here, yeah, we had a clear longer uptrend looking at this data set. And at this point in time, now the market moved sideways. Yeah, you see it here. The real market behavior from this point in time was sideways. And this shows us that the cycle projection was right on time, because you need to understand that the cycle analysis, or the cycles which are thrown out here by the cycle analyzer, is a detrended view on the markets. Yeah. So therefore, if an uptrend is stopped at a certain point in time and goes into a sideways market, yeah, this is the detrended view. But if you put the trend in, this stopped the uptrend. Yeah. So even the markets did not move down, and are always, the important topic is the amplitude which is changing here should never be treated as a projection how high or low the next swing will be. Cycles are more or less only, or in 80 to 90% of the case, if we deal with market data, used for timing, yeah, projection of timing points, not the magnitude of price movements. There are maybe other sets like Fibonacci, Elliott wave, which can deal better with price projections. Cycles are used for timing. So, and that's what I wanted to mention here. And this is, I think, an important point if you're new to this cycle analysis stuff, that you see if the uptrend has been stopped, then the cycle is in place. So, and the second takeaway is that if you're in an uptrend, yeah, and seeing these this topping projection here, maybe it's not the best to go short. I mean, I'm not here to do trading advice, but you need to know where the cycle analysis, what we're doing here, this is a 2-hour chart, takes place. So first of all, on the 2-hour chart, this is what is shown here, is in an uptrend. So if the cycles tell us, okay, there's a possible topping area here and the market moves sideways, then more or less the cycle projection was right on time. Okay, so that's why the 2-hour chart was on time. I also reviewed the daily and weekly charts so that we are waiting anyhow for a more important turn in the markets, even taking the longer time frames into account. Okay, but that's it for the 2-hour chart and just a review. So now let's update this analysis because we have now moved to the across the half point, approaching a projected bottoming area. This might be a good place to re-enter the market. Yeah. So from the topping period and the uptrend, I told you the sideways period we have seen now for the last week is a perfect match on the projection we did. So now we are approaching this down window here, even from the projection we did 2 weeks ago. If we are in an uptrend, if you are dealing with shorter time periods like these 2 hours or even intraday topics, might be a timing period where you can re-enter long positions, yeah, as we're still in an uptrend phase. So that's even maybe more important. Or if you have just set close stops, yeah, against your running long positions at this point in time, so not going short, because going short in uptrends is always a risky game. But at least now, as we have now moved sideways, might be a point looking now for reestablishing the existing uptrend. So, but let's update the analysis for that. So this is just the data 2 weeks ago. We now update the data to include the latest data point, which I will just do here. So adjusting the endpoint, update the analysis. So now you see that this data, and you can see the sideways move here now very clearly. So let me just re-see that this was the point where we told you that we might see a top. I think it was here, and you see we had a real sideways move coming out of this uptrend here. Yeah, okay. So now let's update the cycle. So the cycle with a length of 85 is still active. That's exactly the same cycle length we saw 2 weeks ago. The longer cycle has a little bit shifted from the length period. So it's now the length of 121. I think it was 128 or something like that. So we need to reactivate it because it's not exactly the same. So now we have the same 2 cycles. They are allowed to shift anyhow, and have updated now our analysis, which shows us that we are, it's more or less the same projection, even though the length has slightly changed in this analysis. But we are approaching now a bottoming phase. So at least what we could see is re-establishing the uptrend. If we just look at the 2-hour bars here. So this was the up move. We've seen now that this top exactly pushed the market into a sideways move. And we are now more or less approaching this phase here where we could then see re-establishing the uptrend from the 2-hour chart. That's the way how you read the 2-hour chart. For sure, you need to add additional measures, as this is just a pure cycle analysis. You need to confirm with different ways before you go into the real markets here. But I think that's just the caveat. Yeah, I see your questions a little bit rushing in. So related to this analysis, let's directly jump into your question. Let's not wait until the end, because I think it's important now to go over your topic here. So, and I think let's start just with your current last question, Stan, you just brought in. I just want to put it on the screen so that everyone can also see it. Yeah, Stan, you asked, the vertical lines on the x-axis are not evenly spaced, making the time analysis more difficult to to read? Why is it not evenly spaced? And therefore, that's an important question to understand what's happening here on the time axis, and why we don't provide intraday data feeds right out of the box, because it's more complex if you push this on the chart. So first of all, the x-axis here, if you deal with daily data, that's what we mainly provide as wrappers, is more or less evenly spaced. It's just that the weekends are not there, so we talk about trading days, not calendar days. But anyhow, we have a more or less evenly spaced trading days series. If we switch to intraday data, which I did here, but just in this case, I uploaded the 2-hour data on my own. You can do anyhow. But then we need to be careful on the x-axis, on the time axis, because in the not the past, but the data you uploaded, we have the data set based on the space or the periods you uploaded. Yeah, so it's the 2-hour chart. So we have I think 4 bars or 4 bars a day, depending on your time. So 1, 2, 3, 4. Yes, exactly 4 bars each day for a 2-hour chart. So now the cycle analyzer is not aware of what intraday periods you pushed and what is a kind of continuous data set, or if you're just analyzing data sets which breaks in the intraday period. So therefore, we need to adjust that. So moving into the future, on the right point of the latest data point here on the right hand side, it's just continuing with continuous time, which is wrong if you deal with your chart analysis, because on your chart analysis impact, you will have accounting for these intraday markets on and off. And on the Bitcoin intraday charts, it's different, because Bitcoin and currency is around 24 hours, so that we have no breaks. So you always need to bring this intelligence into the platform. What's the intraday data set? What's the on time frame? What's the off time frame? This might be different per data set. So there's no general rule when there's a market break and when there is a period. So therefore, the period into the future from the current day, you need to take care, because it's showing continuous time. What is wrong in sense of what has been analyzed in the past. So the more you move into the future of this projection, the more it is off. Or you need to count the bars, 1, 2, 3, 4, 5, and then you know it's just 4 bars a day, and then you can recalculate it on your own. We need to adjust this. It's just happening because this tool set is not there for intraday trading, and therefore we have not all these implemented yet. But it's coming. So, and in the future, or if we move to uploading data sets, if you upload new data, and I can just start by selecting this one here, you can have a quick glimpse where this information is placed. It's not finally working, but there is the session info, which you can add or need to apply once you upload your own data set. So, and this is already prepared so that the intraday data pauses or the session information is also taken into account when doing future projections on intraday data sets. And as I said, there's it's currently set to 24/7, which means if you have 24/7, there is no break in the projection. You can switch to other session infos, and then it's taking into account the break so that there is no data between the other session info. But as said, dealing with intraday data, it gets more and more complicated, so please be careful with that. But as then, this is just an important point to be aware of if you deal with this data. So now I've just lost the analysis. But anyhow, doesn't mind. So let's get back. Yes, Stan, thanks. I just wanted to pinpoint that. So maybe let's go through the other question. Okay, I think the other questions, let's go I mean, one interesting question I want to raise or bring up from Mike is how to break down the full days. Should we use it 130-minute interval that divides evenly for the session? Yeah, that's a good topic, and I think it makes sense that we dedicate a full session to how to deal with intraday data sets in the cycle analyzer. I think just to cover it in 2 minutes it's. I think for today, I will take it on my to-do list to have a special session how to deal with intraday data sets. For today, I will just make you aware of that you need to take a close look of what's the historical data set and what's the projection line, and in intraday data there might be difference. So it's up to you in regards preparing the data set. You can even fill the gaps before you upload, yeah, so that you put in virtual bars at the missing 2-hour cycle. So then you get full 24-hour cycles here, even if you fill it up. So the pre-processing is a little bit up to you. For today, let's stick to what I've shown, and just I think for today it's just important what the Dow Jones cycles tell us. So I think the last 2 weeks we saw from the 2-hour chart a sideways move, which is in sync with the cycle projection. Now we're approaching a kind of bottoming on the 2 hours, so we can maybe re-see the re-establishing of the uptrend. You know, from the Elliott waves, we are in a 3 or at least 5. So we need to pay close attention on the ending 3 or ending 5 from the larger cycles, which could be then go into alignment with the weekly data on the sentiment measurements, the daily data where we see the topping already, and now maybe the last turn intraday. We will see here, but we will review this data set once again. Okay. Okay, Mark, I think, yeah, okay, this main question to the 2 hours data sets. The other data sets, let's have a close walk through what is shown in the other area. So let's go back to the daily cycles. I think there's not much change, but let's for sure have a closer look. So let me just hide the question. So here you see also the sideways move since 2 weeks. Yeah, what I've shown here, I'm just, this is exactly the 2 weeks of sideways move, which we did project 2 weeks ago. I'm just happy about that, but anyhow. So current cycles, we still have the peak here. So this is the cycle we are observing since last year. It shifted 175 now into 167. But let's combine this with an update I explained some weeks ago. So the most important cycle to pick, that's an easy one to spot here, is the one which is standing out, 167 trading days. So this is the daily cycle. It has not changed. It has not really changed here in regards to the projection. We are aware of that. So if you want now to make this projection model more intense, so the next question would be, what cycles could we add to the cycles composite? And therefore, there's the method, and we talked about this a lot here, which is called using the harmonics out of the most dominant cycle, which is a natural observation anyhow, so that you pick harmonics of the most dominant cycle, then you are in tune with at least cyclic behavior. And to see how the harmonics look like in this data set, we can switch to the advanced tab, yeah, and in the advanced section you can turn on advanced features like the harmonics module, which shows you the harmonics, the relation between the detected cycles. Preset is that we use this harmonics to analyze here, but if we just updated the harmonics component, here will show down below. What's about this harmonics component? It shows you just the detected cycles here on the x-axis listed. So these are the same cycle length which are listed here in the table. That's not the difference. They are now just connected. Yeah, if you hover over these dots, they show you how they harmonically relate to the other cycles which we have here in the list, and that's the important information which we can use here. In this case, we are interested in the harmonics related to the cycle of 167. With the 8% deviation, we see that there's no harmonics which are close, where we have this short allowed deviation. But if we extend maybe it to 10% or 15%, so you can adjust it here, so we allow plus minus 15%, besides the exact harmonics. And then we can click here on the list here. By the way, if you click on the 167 here in the table view, then this is now fixed here. Yeah, so I will even make it a little bit larger. So this is now fixed, and you see if we allow a little bit more sideways moves to the harmonic around the 167, we see 3 other cycles which could be interesting here. So one is with a length of 365, which is exactly the longest one here also on the spectrum. So we can add this into the mix here for our projection. And the shorter term cycles with the lengths of 75 and 65. So this is the 75 here in the spectrum. So you see here it stands out in the spectrum. It also has a very high strength value. You can see this by the size of the triangle. The size of the triangle is very big, but it's red. So the Bartle score is not as good as we would like a Bartle score to have. But in this case, the harmonical relation could give us a clue. Maybe just use it, even though over the whole data set it has not a statistical significance based on the Bartle score, but we have a high strength and we have a good harmonic to our main cycle here, which is listed with 167. So this could be a reason to add it. So therefore, I've also added the 75. It's shown here, and it's shown on top of the list here, by the way, because this is the strongest cycle. So with the highest strength score. So this anyhow makes sense, even though with a low Bartle score here. So because and now we have built a composite model which consists of the main key cycle here with the length of 167 and have added now the main two cycles which have an harmonic relation to this cycle. And that's one method how you can build composite cycles. And if you go back to the article I've just mentioned at the beginning, the case for cycles in the latest Cycles magazine, you will see that also Dewey talks about harmonical relationships and several factors which are important if you want to deal with harmonics. I mean, just looking at this model here, what's always impressive is that you see how this harmonic model, just picking 3 cycles, was more or less, is perfectly able to explain the market's movements here. Yeah? If we just add this, so this is the top, this is the low, this is the top of this cycle here, this is the low, this is here a top, going then into this low here, and having the top here, the low here, the top here, low here. Okay, this was at least from the top, low, top. Here you see that the amplitude, should not be taken into account, but the timing is more or less perfect. So don't get irritated by the different amplitude moves here. The timing is what we're interested in. Then we saw this drop here. Yeah, the top is then here, the low is here, top here, the low here. Now we are sitting here at this projection. That's always impressive how dataset behavior can be explained just by 2 or 3 cycles. And that answers also an important question, and I think it was raised in some ideas. You don't need to, and you see the cycle scanner detects lots more cycles here in the list, but you don't need them. You don't need them. So, and if you add them, so I mean, I've shown you that these 3 cycles are enough to explain the behavior. For sure, we can add up all cycles which are detected. Be careful with detected, and you see, it might look even better. But this is now overfitting. This is curve fitting. This will never work. You know this. What happens if you overfit analysis from the past? It's worthless for making future projections. Same with cycles. So digital signal processing might detect false cycles. Digital signal processing might detect cycles which are not there. So this is not a perfect answer to everything. But if you know how to pick the 2 or 3 important cycles, and if you have a clue on how to pick them, use harmonics, use the Hurst nominal model, use the Bartle score, use the strength, then you have 3 to 4 measures which could guide you in picking the most important. And I've shown you how these 3 cycles explain the market behavior. So skip all the other cycles, which seems to be there if you put this on the chart, but they are not there, and they are not useful if you do a projection. Okay, so the daily chart. So let's clear it up. And I was telling you that the 176, and I think we go with the harmonics, and then I will stop here with this analysis. Shows you that we are still looking for a major top from a timing perspective, and the 71. Yeah, these are the 3 cycles here. So we are still past that. So now you combine this with the 2-hour chart. So even with re-establishing long positions, be careful, as the longer cycles seems to have turned already. So maybe you need to have a careful look now on technical indicators on the market, on sentiment measurements. We could approach an important turning point in the markets right now if you combine the daily. The intraday allows for another up move, so maybe we need to see how it plays out. Okay. Jumping back to your questions, I think you have some other questions about the harmonics. So let's bring in your question on your harmonics. Mark, okay, if it's answered, stop. Agnes, can you save your harmonics because I have to type it again and again? Yeah, you're right. So you're dealing with your own harmonics, which was thanks for using that. Right now you can't, that's right, but you can save the other settings, just not the harmonic settings. Yeah? You have the profiles here, and I think this was also a question of another user. So maybe now let's bring this in. Agnes, I will get back to you, but can Ikram, so what's the difference between P1 and P2? It's profile 1 and profile 2. Yeah, so if you see P1 and P2 here on the main screen, is that you can switch between pre-configured settings in the settings panel. So when you open the configuration and we just move to the harmonics module where you put in the harmonics you want to track, this is currently not saved. And there I need to excuse Agnes, this will come so that this is saved, because if all the other parameters are still saved. So if you want to save these parameters and don't need to readjust this the next time you open the analyzer, you can go to settings, go to the profile, and once you have saved whatever you want to change here and click to set, you need to press set. Then this is saved. Next time you open the scanner, it will automatically use this profile. And why do we have P1, P2? For me, for example, I have 2 main configurations, dealing with shorter term cycles, dealing with longer term cycles. Sometimes profile 1 is taking care of the Bartle score, profile 2 is not taking care of the Bartle score. I can set this in my individual settings, and so my profile 1 might be different than your profile 1, but you can save it. But getting back to Agnes' question, I think it's the harmonics. During one of the next updates, it will be included that in your settings, also your harmonic settings will be saved. You're right, it's not there yet, like the other settings. Please give us, I would say, 2 to 3 weeks, and I think then the harmonics will also be saved. So the skew factor, yeah, thanks for bringing this up, Agnes. This important is also the skew factor, which you apply to make your composite more precise. Yes, and thanks for bringing this up. And this is related to, not to cycle analysis especially, so mainly to how financial markets during the last 20 to 30 years behaved, because they are not symmetric. Yeah, so our basic cycle model assumes that the length between the top, the bottom, and then the next top is equal. So it's a symmetric cycle. That's the theory how we apply cycle analysis. But especially financial cycles behave different, and there's a lot of research on that. And that's what we call the skew factor. So what's the skew factor? The skew is that downturns in financial markets happen more quickly and more sharp. And so the downturn phase of the cycle is more or less squeezed on the time axis, while the upturn phase of the cycle takes longer and lasts longer than the theoretical equal length. So it's expanded. So the up move is expanded. The down moves are squeezed into shorter periods, and we can use the skew factor for that. Let's do this here. So this, and what does it mean? So in general, this market behavior means that if you use the equally spaced cycle model, which is the basic cycle model, that's quite normal that the projected top will be overshooted in regards of time and amplitude, because that's the skew. The upswings last longer and go higher. So, and if we want to bring this market behavior into our composite, we can use the configuration. Go to the post-processing on the post tab, and then we can add the cycle skew factor to the analysis. If you activate it, it's pre-configured with how financial markets behave right now, because the setting is 0.35. There's an article in the documentation which explained it, and there's also an article in the first issue of the Cycles magazine where this is explained. So if you want to understand more about the skew factor, head over to our cycles.org webpage, open the first issue of the Cycles magazine and search for this article. I've now activated the cycle skew, and you will see that in our cycle projection, you see here that this adjusted, that it's slightly shifted to the right, and then it anticipates a sharper downturn. So in regards to time, the time is skewed, and the upswings take longer. And you can always see in the past, I've circled the charts, that how exact the tops and bottoms now go into this composite model here. So it's just applying the skew, and it's now most perfectly aligned in the past and the tops here. So you see that even the digital signal processing from the detection works with equal spaced cycles, and if you apply then in the post-processing the skew factor, how really nice this fits to financial markets. You need to be careful when to activate the skew factor, because this is, from the research point of view, you need to know where to add the skew and where not. In financial markets, it's currently okay, at least on the daily basis. I would not add the skew factor on intraday charts, so be careful. But on daily charts, weekly charts, monthly charts, you can use the skew factor. Thanks for bringing this up, Agnes, by the way. Okay, so I think 40 minutes. Wow. Okay, so I think for today, two important analysis. I updated the 2-hour charts. We had a look at the daily chart. I just want to add the sentiment volatility index for a second and then get back to your final questions. Okay, as sentiment is always important when we are talking about market data. Never trust on the raw data itself. Always try to bring in related data sets, and related data sets dealing with financial markets are sentiment measures. There are lots of different sentiment measures out there. Two which are provided as standard measures is the volatility index. It's well known. It's also called as fear index often. We have the financial stress index here, which is a weekly data set. I've reviewed this, and there's the other data sets out there. But let's just have a look at the volatility index, which is a basic measure here. You see it has a length of 176 from current cycle analysis, quite similar to the daily Dow Jones index. And now you see that the volatility index cycles are coming into alignment with the daily cycles, which they didn't in the first quarter of this year. We did a review on the daily chart for the main markets, which indicated a top already in the past. So the cycle analysis changes day by day, and it's not static. And for sure, if you review the sessions I think we did in February, the daily cycles on the main indices already showed us that they should are in a topping period right now, but this has not been in alignment with the sentiment cycles on the volatility index. And I think one out of the community mentioned this always, that even though the daily cycles show a top, the sentiment index did not show a top, which is different now. So if we look at the cycles today, they come into alignment. By the way, that's another important finding of Dewey. cycles need to align from different lengths and phase. What is now happening? And now it seems that the sentiment cycles and the daily cycles come into alignment. We need to take care of the intraday 2-hour cycles, which are coming from a down move, moving into next upturn. So we might see another up leg in the market from the intraday, and then we can take this into account. If you're not aware of the sentiment data, you need to read it vice versa. So a cycle low in the sentiment data is similar to a top in the main markets. So don't be irritated by that. Okay, but I think now it's a complete market analysis. So we get back to the title, Market Cycles Update. So we did review the main markets based on cycles. Therefore, it's a cycle projection. Yeah? It's no advice to trade whatever you're doing. Trading is much more than cycle analysis. This is what the cycles tell us. And you now need to take care of how to add your knowledge on whatever you do with this kind of research. Okay, so now for the final section of this part, I will review your additional questions which have come in. So let's open your questions panel again. Mark, is it better in your view to pick one best cycle, fit cycle, and then use harmonic for 2 others, or highest strength with highest Bartels? It seems like we are ignoring the high Bartels score. Okay, thanks for this question. Best fit or highest strength with highest Bartels? I think it's a mix of both. I can't give a clear answer on that, but let me try to show it. And let's get back to the data set we're analyzing today. I will just open the daily Dow Jones and let's repeat here. So what I always recommend is find the first dominant best fit cycle anyhow. So the one approach is you go down the list here by strength. So the highest strength and the good Bartels score, which by using this approach would lead you to the cycle just going from top to bottom, high strength, good Bartels score. So from the Bartels perspective, you would ignore the cycle with the length of 75 here in this case. So that's the cycle to start with anyhow. So that's, I mean, dominant cycles is a special wording, but at least that's the most important cycle to add just looking at the table. And also you see the same here. It's a clear peak in the spectrum plot. So this is at least the starting point I always would use. And more important is, in this case, what you pick as key cycle, it should have both. The key cycle you pick before you do anything else should have a high strength and a high Bartels score. That's my first answer. The second answer, then it depends a little bit. What you think from a cycle analysis perspective is the approach you are following. One approach is following now the harmonics model. So and the harmonics model then shows us, let's just bring it up here, advanced harmonics. I mean, you can calculate this on your own. The harmonics model makes it just a little bit easier to see the relations between the why can't I need to click it here, 15% deviation. And now the next step, and I think this, I hope maybe this answers the next, this harmonic model now brings up the relation to the cycle with a length of 75, right? What you're seeing here. So the reason now to pick the cycle with a length of 75 is not the Bartels score and not the even though not the strength score. The reason now to add this cycle with a length of 75 is the harmonic relation. Maybe the allowed deviation of 15% is a little bit too high. So if we play the game very, very carefully and just make the maybe 10%, then we see that even the cycle with a length of 75 has not an harmonic relation with the one of 165. Maybe for demonstration I would not use it. So now if you're a little bit in between, so the question is now, should I pick now the cycle with 75 or not? Because if I allow 15% deviation, it is an harmonic. But if I just allow 10% of deviation, it's not a harmonic relation. So then I would count in the Bartle score. And the Bartle score clearly tells us the statistical significance is very low for this cycle. So, and if you bring these two approaches together, I would not pick the cycle with 75 for this model here. So that's the way I would, I would combine these models. There's not one way, just only using harmonics or just only using the Bartle score. I think this would be too mathematically just on a short track here. We should take into account both. If you have a high harmonic relation, you can discount a low Bartle score, and the other way around. But in this case, we are in between. So the harmonic relation is not so high and the Bartle score is really not high. So maybe if we bring both into play, we should not use the one with the 75. So in this case, then, for example, the cycle with the lengths of 42 and 33. So the shorter one cycles here look more interesting because they have a high Bartle score and a high strength. So and now it gets interesting because let's just use the one with the 42. And if we see, and maybe the 32 also, we see now, no, the 71 has not a harmonic relation, so it will not bring them in. So, but that's a mixture. Mark, I hope this answers a little bit, not going too deep into this topic, but you need to combine Bartles and harmonic, and therefore we brought the harmonic model in because there's not a straight answer using this or that. Now you are able to combine it. And let's start with the not the best fit cycle. I would not count it the best fit cycle here with the one of 167. I would count it, this is the strongest cycle from the spectrum plot. So it's the strongest cycle which is detected by digital signal processing. By taking account the second highest strength score. So therefore, and once you have found the most important cycle, then you can bring in harmonics or Bartle score to decide which other cycles to add. Because the reason why you should look at it, you need to limit your composite. Never add more than 3, 4, 5 cycles. And that's harmonics and Bartles would give you a good orientation which you want to add. Okay. Hope this answers a little bit this topic. Mike, a special session with your experience on cycles and expert tools would help us as global. We do not have to agree, but it would be ideal if we come to a standard. So, okay, I learn you're interested in also analyzing intraday data sets. And how to do this, and I think what you need to look at. As you said, there is not one approach. There is not right or wrong. There is not black and white. An intraday cycle analysis gets more and more complicated. So therefore, we always are a little bit cautious of using intraday data. We have talked about this. Anyhow, also the x-axis gets more and more complicated dealing with intraday data set, but also the noise level on intraday data is much higher than on daily data. And detecting cycles in more noisy data is even more complicated. So we get more false cycles in intraday data sets. So you need to even have more knowledge on how to differentiate between false and right cycles. But in the end, I agree, Mike, it's important to at least discuss expertise on intraday cycles. So therefore, I would not judge, I have a clue to do that. I think that's important that we have our community talking about intraday cycles. And my answer would be, yes, Mike, I will use more and more intraday data sets also in this session, because I think it's important to understand what works and also what is not working and why. Yeah, so and this is a topic I will take into the next sessions for sure, Mike, to have a little bit more on intraday series. And as said in the beginning, I think we need to dedicate a special session just on intraday because there's so much to tell. Stan, I think your skew factor. Yeah, I think this is a very, very strong skew factor, which you're using here. So 0.76. So this is, but maybe this is how the current markets behaved. So this very high skew factor means you are anticipating very strong down moves in very short periods of time and then very long uptrend phases, which I agree, this is what we observed. I mean, if the skewness changes, we need to be careful with these aggressive settings on the skew. But in these uptrending phases with very sharp and small down phases, a higher skew factor would make sense. So I just can agree, Stan. Just need to be careful when the market structure changes. The skew factor is too aggressive here. Okay, so I think the other comments, just reading, you are interested in intraday data session analysis. I will take this with me. Just be aware of that we are not doing trading forecasts here in this session. This is about cycle analysis. But I agree, knowledge on intraday cycle analysis is very important. And that's the reason I want to bring it in here. Because there's lots of what we can do wrong with intraday data, but for sure it can help us on intraday data sets. And maybe to close the session with an outlook, if we deal with intraday cycles, there are different ways you can use intraday cycle detection then, maybe to fine-tune technical indicators. Maybe you can browse the internet, because if you know the detected cycle length on intraday data set, this helps us fine-tuning technical indicators, which is very important then for your own analysis if you know how to tweak indicators. I think you all put on your chart whatever indicators, and maybe you wonder, how do I set the length setting of 13 or 14, even if you use an RSI indicator? Have you always questions how to set the length? No or yes? So where do you derive the length setting for technical indicators? Cycles. Okay, so that's maybe an outlook for one of the next sessions, how to fine-tune technical indicators based on intraday market data analysis. Okay, thanks for joining me today. Again, my God, I wanted to have this a short session, just half an hour, so still running 30 minutes, 60 minutes, approaching 60 minutes. So, ladies and gentlemen, thanks for staying with me today. Thanks for your questions. I think we have talked about some topics. Bring up your ideas again, read the magazine. We will meet next week on Monday, same place, same time, same day of the week. This is a cycle. So seeing together next week. Thanks for tuning in. Bye-bye. Have a good week.